Well, good morning, everyone in Rio, and good afternoon for people in the UK. And good morning, good afternoon, good night for everyone who's watching us at the YouTube channel of the Institute of Economics, UFRJ. We're beginning today the second session of the Leeds and Rio Bridge seminars. We're receiving today Professors Luiz Fernando de Paula from UFRJ and Annina Kaltenbrunner from LUBS. And our talk today will be about how financialization impacts core and peripheral economies. The question is, does financialization impact core and peripheral economies in the same way? We'll have a quick start with both professors talking about 50 minutes about how they approach this topic, and then we can have an open conversation with everyone. So please join us at the conversation. And as well, I'd like to thank you everyone who's joining us today early in the morning in Rio, and I hope we'll have a nice conversation. Bianca, can you do you want to add something?
Just to thank Nina and Luiz Fernando once again for their participation, for their interest in this initiative, and just also to remember everybody that the seminar series happened on the first Friday of every month. At the same time, today was 9 o'clock in Brazil. Is it 12 o'clock in the UK? 1 o'clock, yeah, 12 o'clock in the UK, but usually it is at 10 o'clock, right? 11 o'clock in Brazil, and 2 o'clock in the UK. Is it 2 o'clock? No. 3 o'clock. 3 o'clock. 3 o'clock in the UK. So yeah, just stay tuned, and yeah, so yeah, the first Friday of every month. So thank you very much for your participation as well. And as Norberto said before, the idea here is not just to have a presentation, is more to focus a little bit more on the debate. And in the previous presentation was so interesting, and I'm sure today is not going to be any different. So thank you so much once again, Nina and Luiz Fernando.
So I think Nina will start, right?
Yeah, I can get started.
Okay. So.
Wonderful. Well, yeah, thanks so much for having us, and particularly thanks so much for organizing this, Bianca, Norberto, and Gabrielle. I think this is a great initiative, and it's part of our wider efforts to bring together UFRJ and Leeds a bit more and establish a kind of a research and teaching collaboration. And I think this is a great first step, and the idea of nurturing a discussion is brilliant, and I think I'm really looking forward to that. So I have prepared a few thoughts on the question. What I mainly want to do is, I think I want to just sketch out probably quite broadly some of the arguments without going into too much depth. And then maybe we can pick up certain aspects in the discussion. So I don't want to explain, or I don't want to go into detail, but I just wanted to probably give the big parameters about how I would see the question or the discussion issue about whether financialization impacts developing countries differently. Maybe before I go into the aspect of developing countries, just very briefly, just to briefly set out what we mean with financialization. I'm sure everybody in the room knows, but maybe just to frame it and have it as a background, it's also quite useful to have a starting point what we talk about this. And of course, financialization is massive, and so I can't really do it any credit here, but I think I just want to briefly characterize, maybe just give the definitions and discuss very briefly what people have talked about. So when we talk about financialization, so the research agenda, which has appeared maybe 10, 15, 20 years ago, people have approached it from very different angles and have adopted different definitions, some more narrow and some wider. Probably the widest definition is, and one of the most cited one is the one by Jared Epstein, where it's really about broadly defined about the general increase of financial operations, financial motives, etc., in the working of the economy. And I will come back to that, but I find that quite a useful definition in the sense that it leaves quite a lot of room and space to do things, to basically look at financial phenomena, new financial phenomena, but always under a common umbrella. And I find it quite useful. I know people have criticized the concept, and we can come back to that, but I find that useful to have that umbrella concept. So that's the widest definition. of financialization. Then there are more narrow definitions, and of course, the narrower, the more open to criticism, or the more open to rejection, if you want so. I think one I want to highlight is the one by Greta Krippner in their seminal work, which defines financialization as a new regime of accumulation where profits are mainly generated through financial operations. And she shows that through the operations of non-financial corporations in the US, who seem to have made more profits through financial operations rather than the underlying ones. Now, that is actually something, digging a bit more deep into data, is something which isn't always either affirmed or kind of seen over more recent years. So work by Joel Rabinovich, but also by Brett Christophers have shown that this is maybe not as strong as one would think. And then there are kind of even more narrow definition and more empirical definitions, which really look at, what kind of empirical phenomena can we observe under this heading of umbrella. And this is, for example, the approach Kostas Lapavitsas has taken, where we look at the new financial operations or financial practices of different economic actors, including firms. So there are here questions about the increased holding of financial assets of firms, but also the increased payment of financial liabilities. And I might come back to that in the context of emerging and developing economies. And also the issue of shareholder value. So have firms paid more dividends and profits to their shareholders? Then the question of households. So the issue of consumer debt and mortgage debt, but of course in developing countries, and again we can come back to that, consumer debt, credit card debt, but also the financialization of welfare provision, Lena Lavinas's work, etc., etc. And then finally, also the financialization, if you want, so that if you want to the structural changes of the financial system, where more generally we haven't observed a move from more bank-based systems to market-based systems. So financial intermediation, as characterized in a financialized capitalism, is more mediated through markets, capital markets, derivative markets, and tradable assets, repo markets, etc., than more long-term, stable, and patient financial relations through the banking system. So that's very broadly how I would summarize the topic and also the literature on financialization, but we can come back to that. Now then, let me very briefly sketch out, because we don't have that much time, how I think or how financialization is or isn't different in developing and emerging economies. So I think the first aspect I want to touch upon is that the literature around maybe subordinate financialization or dependent financialization or peripheral financialization, however you want to call it, which has argued that financialization is different in developing economies because it's fundamentally and maybe more strongly shaped in advanced economies by the global economy. So I think we need to discuss this. I deliberately used the word shaped by. The question, is it actually driven by it? I think this is maybe something we want to come back to. Do we think external factors are so important that they can actually set off financialization, and it's a key factor? Or do we more think financialization is shaped by these global factors, which I do think is really important, and also by these global factors, but also the subordinate integration into the global economy? And that subordinate integration, very, very briefly, and again, let's come back to this later, but it kind of, in a way, this is a structure subordination. So it relates to both the structures of production, so the organization and the integration of global value chain and the subordinate integration into these global value chains, but also the dependence on volatile commodities, and more broadly, the balance of payments constraints. So I think this is where financial subordination meets Latin American structuralism and the balance of payments constraint. But also the monetary and financial structural subordination. With monetary, most broadly, we can think about the currency hierarchy and the different roles money takes into the global economy, but also financial in the sense that most financial activities are still aggregated in core financial centers, London and Wall Street, which in a way creates these hierarchical relationships. And I can go back into this. So the first sense is that financialization is shaped by this structural subordination, productive, monetary, and financial. The other argument we have been making, and I know people like Bruno de Conti have been recently making, is also that financialization in developing economies or the periphery also has a systemic aspect. So it plays a role for the global capitalist system, and the returns generated in the periphery are crucial to sustain financialized capitalism, also in the center through the generation of excess financial returns. And that's also the argument we fundamentally make with Bruno Bonizzi and Jeff Powell in our paper on financialized capitalism. So it's the systemic nature. So it's both structural, it has to do with the structures of the global economy, and it's both systemic. And it's that structural and systemic subordination which shapes financialization in developing and emerging economies. Now, that doesn't, of course, mean, and we have been very often criticized for, in a way, having this unifying framework, that doesn't by no means mean that there isn't variation within these financialization phenomena. So I think these are the broad structures and systems we need to talk about, within which then we observe variegation which is both in a way, and again, I'd love to discuss this with you, which in a way maybe might be distinct to developing and emerging economies vis-a-vis advanced economies, and variegation which is very country specific. Brazil is different from a Turkey or a South Africa. But let me maybe touch very briefly, and I know my time is probably slowly coming to an end. Let me briefly talk about two aspects of this potential causes of this variegation. The first one is, of course, domestic and political economy. And there, I think, domestic capitals, that in a way, the dominant domestic capital plays a fundamental role how financialization is structured. And here we could maybe argue there is a specific aspect in the sense in developing economies, in the sense that domestic dualistic production structures and dominant capital located very much in comparative advantage sectors, in a way, shape the way financialization happens. And I can come back to that. But in the sense that there's both variegation within developing countries because capital structures are different, or the dominant capital is different, but also from advanced economies in the sense that production structures are dualistic and heterogeneous. The second is the role of the state, but I don't want to go into this. I'll come back to this later. And the third one, of course, is institutional variegation. And so financialization, or what the nature of finance, will fundamentally depend on the domestic structure of the financial system. So a system which is more bank-based, I come back again to Turkey, will look different to a country which is more market-based. And I think Brazil, but you know much more than I do, is in a way somewhere in the middle there. But we can discuss this. The final thing I want to say is then that, and I think this is something we discussed a bit in the prep talk for that, is so within these structures, the empirical manifestations of financialization can be very different. And they will be very different in developing economies from advanced economies, and I think really warrant detailed specific case studies, and will depend on the individual country, which doesn't mean, and again, I'd love to discuss this, which doesn't mean that we can't start from some of the financialization phenomena which have been observed in developed economies as a yardstick, and as something which we can kind of, in a way, see whether these phenomena are observable. And in that sense, maybe Kostas Labovitsa's work is useful in the sense that he sketches out some of these empirical phenomena. And then finally, and then I'm done, and I don't want to give over to Luiz Fernando, is because the question also asks specifically about outcomes. Is financialization outcomes different? And there, I don't think it's that different. And I think that, financialization in the core as well in the periphery, I do think is a factor which shapes deindustrialization, which shapes the restructuring of production, but which also fundamentally affects the power relations between finance, production, and labor, and affects labor relations, wages, social conditions, and in a sense also democracy, but we can come back to that. Right, that's me. I think that was probably my 15 minutes, very briefly sketched out, but I'm sure we're going to go in some of these points in more detail later. I hand over to Luiz Fernando.
Okay, thank you so much, Nina, for a very nice presentation. You have covered all the things. I would say that I don't know if I will talk something new after your initial talk. Well, it's a pleasure to be here, as Nina mentioned. It is I hope that this is just the beginning of a long-term relationship between UFRJ and Leeds University. Very, very nice initiative. Well, as you know, that United States is the most financialized economy of the world. Most studies about financialization are related to United States. Just to provide a figure, non-bank financial institution assets are 172% of GDP United States, compared to 25% Brazil, 20% Mexico, 28% in Russia. So as Nina mentioned, there is a variegated sort of financialization in the periphery that depended on the productive structure, depended on the financial system as well. So, but still there is this challenge to understand a bit more about this phenomenon. Well, I will focus my initial talk on discussing international financialization. I'm more specialized on the effects of financial globalization in emergent economies. And also because financialization of peripheral economies are very related to their international financial integration. Most developments in the literature on international financialization are what I call new clothes for old arguments. That is, they are related to the same criticism of financial globalization already made by heterodox economists. Well, I will focus here in my brief initial presentation in two papers, recent papers that I have written. One with two PhD students, Julia Leal and Mateus Ferreira, forthcoming in the review of Keynesian Economics, and another one with Barbara Fritz and Daniela Prats, forthcoming in the Intervention Journal. I am particularly interested in showing that there are different manners of financial integration in emergent economies that results in different sort of financial subordination. Emergent economies are not a homogeneous block of countries. Well, first, I will argue that there is a strong connection between production asymmetry and financial asymmetry in emergent economies. The literature in general shows that large capital inflows can result in disindustrialization, as Nina mentioned, due to their effect on the exchange rate, a phenomenon that Alberto Botta called as financial Deutsch disease. However, the road here has two aims. The abundance of capital flow affects the productive structure, but also productive structure shapes the amount and the sort of capital inflows that a country attracts. Productive asymmetry and financial asymmetry are two sides of the same coin. When we compare some big Latin American economies, such as Argentina, Colombia, and Brazil, with some Asian dynamic economies, such as China, Malaysia, and South Korea, we see that the ratio external liabilities to GDP is much higher in Latin American economies, more than 100%, while in Asian economies, they are less than 50%. Latin America attracts more other investments in terms of the total capital inflows, while Asian economies attract mostly foreign direct investment. On the other hand, there is a clear difference in terms of productive structure, with Latin America more specialized in exporting commodities, while Asian dynamic economies are manufacturing exporters. Therefore, there is a clear difference in terms of economic complexity of these economies. As a result, Asian economies produce a sustainable surplus in the current account balance of payments, while Latin American economies have a volatile current account according to the commodity cycles. The problem that Wrapup analyzed 70 years ago, unfortunately, returned in Latin America. Accused former director of UNCTAD published a paper in our journal of UFRJ, Economia Contemporânea, where he shows what he calls commodity finance nexus. That is, capital flows are correlated with commodities prices in economies specialized in commodity exporters. When commodity prices rise, foreign capital is attracted. When prices fall, the opposite often occurs. So there is some synchronization between the commodity cycles and the financial cycle. All of this means that Latin American economies are much more subject to boom-bust cycles and also generate a stream of net financial income to advanced economies. In other words, they have a much greater financial subordination and external vulnerability than Asian dynamic economies. Well, let me focus now in another and new phenomenon in the periphery related to the financial globalization. A group of low-income countries, known as LUBS, that include, among others, there is a big group of countries: Angola, Belarus, El Salvador, Nigeria, Pakistan, Zambia, just to mention some of these countries, became integrated to financial globalization after 2008 financial crisis and the liquidity abundance to emergent economies that follow the crisis. They are called by IMF frontier emergent economies. However, in the current polycrisis, that is the world post-pandemic, and with the effects of Ukrainian war, using the term of Adam Tooze, frontier economies reveal to be hit more severely by the crisis than traditional emergent economies. Indeed, in February 2023, 55% of frontier economies were in position of high risk or debt distress, compared to 30% of emergent economies. On the other hand, 7 countries that default after the COVID-19 shock, 5 are frontier economies. There are some important differences between emergent economies and frontier economies that I would like to point out here quickly. First, during the peak of the crisis, COVID crisis and Ukrainian crisis, average spreads of sovereign bonds of frontier economies are much higher compared to emergent economies. In September 2022, it reached 1,518 points to frontier economies against 361 points to emergent economies. Speculate-grade bonds offer higher yield assets for global asset managers, but they are also the first victims of investor flight to quality during bust phase. Second, the recent tendency of increasing the issue of government debt denominated in local currency in emergent economies does not apply to frontier economies, as they issue mostly government debt denominated in foreign currency. That means that they are much more subject to the problems related, what is called in the literature as original sin. Third, frontier economies have a much more thin financial markets compared to emergent economies, whatever indicator of financial teeth one can use. The interplay of these three figures explain why frontier economies are even more sensitive to changes in the global financial conditions and the liquidity preference of global investors than emergent economies, and why they are the first victims of herd-like behavior of these investors in moments of flight to quality. I conclude saying that Rosa Luxemburg argued in her book, Accumulation and Imperialism, that imperialism is always expanding its border to include new countries to be exploited. We could also conclude that financial globalization is also expanding its border to exploit new emergent economies. That's my initial talk. Thank you.
I mean, both talks were, I guess, very inspiring. many interesting questions and topics that were raised there. And I think we have a lot to explore. I don't see any raised hands so far. So I don't know if people are a little shy this early Friday morning or afternoon. But I don't know if Annina would like to. Oh, Gary raised his hand. Okay, Gary, please. And thank you for joining.
Thank you. Just to throw a couple ideas out there in listening to my colleagues and co-authors, indeed. One is that, Nina, you mentioned Barbara Fritz's effort to cast the financialization in the framework of a regime. And what's always confused me about, as I've heard her elaborate, is how this fits to, say, some of the work of, say, Dumenil and Levy as a kind of variation of the French regulation school. Is it an effort to separate the dynamic of financialization from the broader dynamic of capitalism? When we hear Luiz speak today, he kind of bringing those things together. And that's kind of a question, is financialization something that we want to understand in the broader frame of capitalism, or could it be seen independently? Second reaction to your comments, Nina, and then bridging over to Luiz, is interesting that the micro, meso, and macro levels are all kind of there in these conceptualizations, and maybe us being clear on which level we're talking about would be helpful. And actually, Luiz, as I listened to you, I was thinking about the paper that we co-authored with our friend Antonio that appeared in the CJE in, I think, 2006, in which we talked about banking strategy. And the big takeaway of that paper was that if you have banks that are in an environment, and if basically most of them are, some of them are following the leader and being kind of cautious, but other banks are being aggressive in their expansion or loan making capacity, that the more aggressive banks will pull the strategies of the more conservative ones into a more, let's say, risk-taking posture. So we were looking at this kind of strategic interaction of different kinds of banks. It would be quite interesting to consider that framework in the sense of the influences on and how different institutions are pulled into the framework of the center periphery dynamics in the cross-border world that we live in. That paper in CJE, we just looked at I think implicitly a closed economy, but I think there would be maybe a lot of insight to be gained by thinking about, for example, Brazil's banks, as they've kind of work in a world that, as say Norberto's research has explored, is kind of open, and yet at the same time we don't see them crashing. So how do we understand the behavior of banks in the peripheral countries in this sense of the term peripheral, and how that relates to the behavior of the bigger aggressive global banks in the world in which they compete? Thanks.
Annina, would you like to take that first? And then we'll pass on to Luiz Fernando. Gary, thanks for your questions.
Yeah, these are made. These are. Shall we go in reverse order?
Go ahead, please. Go ahead.
Yeah.
Please.
It gives you time to think, no? So these are amazing questions, as one would expect. So I think let me or discussion. Let's not put them as questions. Discussion issues. So I think the first one, the level micro, meso, macro. I think you're right. In a way, that's a simpler way of just putting it. That we need to look at the micro, macro, and the meso, and because macro being these global structures I'm talking about, meso being the financial structures, micro the individual behavior, and then these of course interact, and they're interdependent and influence each other. And just maybe I don't know whether you would agree, but I just somehow do feel that these macro structures are more important in the periphery, just because of the I do think macro structures are important because of that subordinate position, which brings this volatility, which brings this macroeconomic uncertainty, etc. So I just do think, so if we maybe wanted to ask this question, what is difference, then maybe it's more general, just that these macro structures are just more important than if you're in the periphery, however you want to define it. And then about your regime of accumulation, I think this is a really good question, and it's not something I know very much about, but let me just maybe say three things. I think the first thing is that, and I don't want to go into this debate too much, but I do think that something has changed. But I do think something has changed since the 70s and 80s and with the rise of finance. And I think the nature of capitalism has changed. And I think we do live something like financialized capitalism. And we're locked in, we know there's so many different capitalisms out there now, asset manager capitalism, digital capitalism, what have you. But I do think that there has been a qualitative change since the 80s and the 90s, and a quantitative change with regards to the role of finance. Now, can we define it narrowly as a regime of accumulation where profits are generated through finance? I don't think so. I don't think that's something we empirically see that much. Firms are still producing, firms are still kind of, making their profits. I think more fundamentally, and I think, this is really Jeff's work, but I think Jeff has a point in the sense that what we really see is the kind of, he calls it the internationalization of the three circuits of capital. So we really, so we had, money, commodity, and now also production. And I think this kind of globalization of production in this global value chains, in this total disaggregation, I think that is something new. And I don't think this is something that's going to be reverting. And I think that this internationalization, globalization, that does require a new role of finance. Yeah. And that does changes the role of finance because it creates new risks, it creates new uncertainties. And I think finance becomes increasingly important, both to, in a way, extract, transfer, and realize the surplus value created in these global structures. It becomes more visible as well. So I think in that sense, yes, I think we need to think about a new form of capitalism, but maybe not necessarily in the narrow sense of Greta Krippner's definition of where do the profits come from, but more maybe in in this kind of how the circuits of capital and the internationalization and the role this creates for finance, and then the systemic role this creates for the core and the periphery, because global capitalism needs uneven structures. So I think that would be my response to this really excellent question. Thank you.
Okay, thank you, Gary, for your question. One of good things of the real leads British that we can discuss with old friends like Gary and him. And well, Gary mentioned our paper in 2008 in Cambridge Journal that we have a model that with the interplay of the balances of the banks, that there is an aggressive bank that have a more aggressive policy of credit, while you have a more passive bank, a more defensive strategies, and we show the interplay during the cycle, the business cycles of the balance sheets. Well, I think that's just thinking about the modus operandi of this model in a globalized financial world and the effects in the periphery. One of the consequences of the financial globalization is the fact that the credit cycle depends on the financial cycle. When you have the boom of capital inflows, in general, it is followed by the increase of the domestic credit in the periphery. So this also cause a boom and bust cycle in the domestic economy because of the credits. Well, I think that this can maybe the public banks, particularly, could play an important role in terms of a counter-cycle behavior, particularly in order to reduce the volatility of the credit that is typical of the sort of connection, and also, of course, this is not only the role of the public banks, not only for the counter-cycle role, but also with some mission of development related to change in the productive structure, in environment, projects, and so on. So I would say that yes, I agree that we could update the ideas of this more conventional, I would say, conventional model that is based in some sort of financial system, but thinking in the challenges of the financial globalization in the periphery, and how could we manage this. Of course, there is also the discussion about the implementation of capital controls, something that Daniela Prats always say me that in UNCTAD they are not more discussing the implementation of capital controls. That is so. I think that is a very important tool to implement autonomous economic policy as well.
Yeah, thank you.
Thank you very much. I don't see any more raised hands, but I would like to pose a quick question related to Gary's comments, and it would be if Professor Annina. Sorry. Okay. If according to your research, do you see that financialization is in any way impacting how firms manage their cash flows? So if there is any observable micro or industrial sense of financialization that you've been exploring, I'd like to know if you have any thoughts on that angle. So again, more micro, more firm management oriented. And I'd like to make a provocation because we mentioned, I think Fernando mentioned a little bit Argentina. So I don't know if you have any, I think we have some colleagues from Argentina here as well, if they like to share, they see the experience from their country similar to what was mentioned here. But first, and Annina, if possible, if you think this is a relevant question, I'd like to hear your thoughts.
Yes, thank you, Gabriel. Yeah, so actually we have and I mentioned that in our pre-talk, we've been working for years now, for the last years, on the behavior of non-financial corporations in Brazil and Turkey. And really, in a way, we took a very inductive approach, and we really said, okay, let's just see what's happening in the balance sheets of these non-financial corporations in these two countries. So with Joel Rabinovich and Elif Karachim, and we did this. And of course, we had a bit in our mind this kind of the financialization of the firm, financialization literature. And then there was a bit of a literature out there which saw that particularly firms from emerging economies particularly have been accumulating quite a lot of cash. So they've been holding, so rather than kind of financial assets, as is the literature on the financialization of the non-financial firm in the US is very much about this generation of increased financial returns. So the holding of financial assets, which then crowds out any productive investments. And there's been evidence that in developing economies, firms have also been holding financial assets, but these are really more in the form of cash. And that is also something we've been observing in Brazil and in Turkey very much so. So if you look at the balance sheets, and we have to say, I mean, this is another, I don't want to go into this very much, but this is a major methodological limitations of studies of the financialization of the firm, that actually looking at these balance sheets category, that's what we found, is actually really hard to do, to find what, to really understand what's going on. Anyway, these firms have been holding quite a lot of cash. And at the same time, they have been issuing a lot of financial liabilities. So particularly in Brazil, as you know much better than I do, a few selected firms have been issuing quite a lot of debt, particularly, some of them on international financial markets, and most of them in foreign currency. And we have seen the same in Turkey. But they have done it, and that goes back to the point of financial structure. They did it locally, so they did it through the domestic banking system, also in foreign currency, but through the domestic banking system, because Turkish firms are really integrated into human banking networks. Anyway, and so I think that we saw that empirical phenomenon. On the one hand, you had this quite strong cash accumulation, and on the other hand, you had this strong international borrowing by a few firms. And so I think we could probe deeper into the question, well, why would firms do that? Why would firms hold so much cash and at the same time borrow, which in the first looking, it doesn't quite make sense, because if you have a lot of cash, why would you borrow? Why don't you spend that cash? And so there is a bit of literature out there. So for particularly the Bank for International Settlements, for those of you familiar with that, basically have argued that what firms are doing is that they're doing carry trade. So they're borrowing on offshore financial markets and investing it onshore at higher interest rates. So basically speculating in the cross-border dimension. Now that is actually something we didn't quite find. So we then complemented, sorry, I should have said that, we complemented our balance sheet analysis with interviews in Turkey and in Brazil. And we found that these firms are more, at least that's what they claim, are more holding these cash assets to protect against macroeconomic uncertainty. So they are really holding, particularly related to global financial crisis, but also the foreign currency debt, which might create future payment requirements. So what we then would argue, and I swear to God, I didn't go into this with saying, right, I want to find subordination, but it does seem to be the case that rather than speculative or return seeking, these cash holdings or these financial asset holdings are merely precautionary and protective in those economies. So that's what we found. Maybe a bracket, what is interesting, what some of them do, particularly the big ones we find, is that the cash holdings are also a good collateral to actually borrow. So in that sense, there's a bit of that, like in a way, a subordinate shareholder value story there, that these cash holdings, they are collateral. And we know that, you need, if you want to borrow, you need a cash flow. And you either need a regular cash flow, and we can go into which firms are that, or you need a cash holding. And then so it's protective, but it's also then in a way having the cash to be able to borrow internationally. So that's what we found with regards to firm behavior, and in Turkey and Brazil. And I'd be interested to hear if any of in the room is working on that in the Brazilian context, whether they would disagree or agree with that, or whether they found something similar.
Yeah, no, that's perfect. Thank you so much. I was thinking that we had in Brazil a case of a commodity company that used a lot of derivatives to supposedly hedge its foreign exchange risk, but was ultimately discovered as actually like speculative positions, and it ended up going broke. But it was early 2000s, I say, the Sadia case. But I guess Norberto wrote a little bit more about the developments in Brazil's derivative markets. And they talk about also, we don't necessarily have cash collateral as a product in itself, but the cash can be used in different forms, for example, via I don't know, like cash funds, and then be used in collateral. But as you said, like, is it balance sheet indicative of the solidity of the company in this instance? So again, just adding some micro flavor to the discussion, because it was discussed a lot in terms of local financial structures for market participants.
Gabriel, sorry, may I add something? No, and I think our findings on that topic, it's very similar to yours, actually. As I told you, we have this week one PhD thesis that was defended here at UFRJ, and I think it's basically the same findings that, okay, they are sitting on a pile of cash, they are not rentiers, you cannot find this on the data. And I think you brought the right mechanism. So it's a part of a strategy to have more flexibility in dealing with cash flows, in dealing with the need to honor some and to service some debt. So and also and a strategy to have more flexibility in borrowing and so on. We focus it more at companies that active on domestic financial markets than with this multinational aspect that you deal with your paper. But I think that the findings are the same. The thing we can say, so to speak, that these firms are they are financialized through the obligation side of their balance sheets more than on the asset side. So I think we have this in common. But I don't know, with bringing another experience, one thing that was brought about in the Viva, in the PhD Viva, it was we always try to use that models. You always try to use that stylized facts of advanced economies firms, corporate firms. So we can use that lenses to understand what happened in Brazil, in Turkey, or anywhere, Argentina, and so on. But one of the discussants from Unicamp, he brought a very interesting perspective to say, well, we need to take a different departing point. We need to look at the history of how the corporate finance market was structured in Brazil, and what is the history behind that. And he was using it as an example. For instance, when you have the privatization in the 90s here in Brazil, we didn't have those foreign institutional investors coming. We have a very particular history here. We have BNDES, which is the Brazil Development Bank, so working and planning this. We have big groups, but big Brazilian groups that started to concentrate capital and to act in different types of sectors and so on. And we have also pension funds, but not pension funds in the UK or US sense. We have the pension funds from public servants, which, for instance, they have a lot of workers in the committees to apply. So we have a very particular thing. So how can we frame financialization of the firm in this context? This was a very interesting side, I think, but still, there's a lot of work to do. So I hope we can do part of this work together in the future.
Can I talk something? Yes, and well, I don't know the Turkey experience. I will focus more here in the Brazilian experience, and there is something interesting that depends on if you have the macro or micro lens to analyze the financialization of the Brazil, you have different conclusions. That is, as Norberto mentioned, for instance, non-corporate enterprises, you cannot say that they are rentier economies. There is no strong evidence, empirical findings on this direction. Although there is, in case of, for instance, the case of Petrobras, the oil company, in the last two governments, there is this very clear maximization of shareholder value in terms that it sold the refineries, specialized in the production of oil, and to generate short-term profits for the shareholders, and no strategy related to the production channels. And so we have this. We have although it could be expected that Brazil, for instance, the no corporate firms had a very strong dependence on financial revenues because of the high interest rate in Brazil. The evidence are not so strong in this direction, and even less in the case of to generate profits and dividends for the shareholders. But when we have another lens, that is the macro lens of the Brazilian economy, we see that Brazil has a very big financial markets, very big financial system, particularly banking sector, and you have all this financialization related to the financial indexation of the economy. That was something that was very functional during the period of high inflation in Brazil, that even avoided the hyperinflation that occurred in Argentina during the 80s, did not occur in Brazil. Brazil lived with 1,000 inflation per year, and we didn't have hyperinflation. The hyperinflation understood as with this running from domestic currency to foreign currency, as occurred in Argentina, and it's occurring currently, unfortunately, in Argentina again. So, so there is this. So Miguel Bruno, for instance, that is a Brazilian French regulationist economist that say that Brazil has an interest-based regime of accumulation. That is, the agents are very depends crucially of the allocation of the portfolio to reset bonds and also indexed bonds as well. Well, just to think about this difference when you have different lens to study this phenomenon of indexation.
Can I quickly come in there? No, I don't want to, because we have other people in the room here who might have, it would be nice to have them in the discussion. But I just want to relate to something which Luis Fernando just said, and which is, so I gave that paper 6 years ago or something. That's how long we worked on it at a conference, and Lena Lavinas was there, and she had quite a go at us because she said, well, all these firms are holding government securities. Miguel Bruno shows that. But it's just not in the data. They're not at least this is, either it's hidden. I don't know in what balance sheets category it would be. But if you look, financial securities is very, very small in the balance sheet. So I think this story that it might have been, so I know the Turkish firms did that in the 90s a lot, not anymore now, because it also has to do, of course, with austerity and fiscal budget. Maybe it was a story of the 90s, but at least in the 2000s, I don't know. Norbert, whether I don't think this is correct. So yeah, just to
but I think may I we just chaos to Gabriel, but okay, I will jump in. I think that's correct, your perception, but I think Elena was and Miguel they were just generalizing a behavior that was expected, but when you look at the data, it's not what you find. So I think the macroeconomic argument is not wrong, but okay, you have the greatest interest rate, one of the greatest interest rates in the world. So how you cannot have rentier like behaviors of firms, and you know. But when you look at the data, I think we can see that part of this is the rentier-like behavior of banks, of institutional investors, of everyone that's working from financial firms, so to speak. And part of this is it's for a restricted part of the population, but for people, for individuals that have a lot of money, that wealth people that will have rentier-like behaviors when setting their portfolios, when choosing in which assets they will invest. So I think we don't need the non-financial firms to that equation, so it can add up. And I think one thing, but this also brings me another point that I will say. We didn't talk so much about households up to now. So I would like also to ask you how you see this mechanism. If you think that financialization, perhaps you can have this duality. You know, you have wealthy individuals that can be rentiers, but also the less favorable individuals, the most vulnerable individuals that are sad in that indebtedness, over indebtedness, and so on. And would like also to hear your thoughts on that, if you have any.
Can I say something there?
Yeah, I wanted to ask you to go first because you're much more an expert of bank behavior in Brazil here.
Well, no, just to I will come back to the other talk about non-financial enterprise. This to say that we definitely need more sectorial lens. There are different sort of financialization, depends on the sector. So when we aggregate, we aggregate all the industry together, all the productive, we cannot see a lot of things. This is just to say. Well, let me return to I am a bit uncomfortable about my friends and colleagues, some friends and colleagues, dear friends, I would say, in Brazil, that they see that all the credit is bad, is related to financialization. When you have an increase of the credit, is evidence of the financialization of the household, the financialization of the firms, and so on. So I think that is expansion of the credit, as Minsky has showed, is the essence of the growth of capitalism. Of course, generate financial fragility, as we know very well. So we have to, even when we analyze it, the experience of the credit boom, for instance, in Brazil, that was from 2004 and to 2014, that increased from 23% of GDP to 58% of GDP of the total credit in Brazil. This huge credit, and I think that's you have some, of course, with because of the very high interest rates, you can see some financialization of the credit in Brazil, But in any case, it was the credit expansion. It was part of the strategy of the growth related to the domestic market during this period. So I would say that I agree partially with the arguments that we have this financialization, but I don't agree that everything is the financialization and that all the credit is the expansion credit is a bad thing. Just to provoke a bit.
Point provoked. I don't know if there's any more comments that or people that would like to echo these thoughts, but I think Wasminski that said credit generates instability that can be both upwards or downwards, and perhaps the upwards instability in the sense of facilitating growth is sometimes lost in the conversation. And picking up Luiz Fernando comments from there. I don't know if there are any more questions. I know the neighbor's dog is barking. If you can hear it. In any case, we can probably wrap up if there are any more questions. In the sense that I would like to invite again our speakers to say if they would like to share some concluding thoughts, and then we'll talk a little bit about the next session afterwards. But before anything, I'd just like to reiterate thanks to Annina and Luiz Fernando, because it's been a great discussion. And I think there are lots of open questions as well on this agenda. And if people are interested, there's a big space for research there in all the levels that we're discussing this conversation, both macro, meso, and micro levels. So it's a promising time, I'd say, to approach matters related to financialization, either critically or not. There's a lot to be said there. I saw no back to open up this mic though. Any comments?
No, I would just cheer our audience. So I don't know if any student have any question. Everyone is shy today. You know, I know that when you start to talk and speak between us, among us, so usually people just get shy and don't say anything. But please, guys, feel free. I think it's a unique opportunity, so we can share your thoughts, the questions, things that you don't agree of what we said here. Anyone? Okay, then. So we can go to the wrap up.
So who would like to begin? Annina? Okay, please.
Yeah, I can go. Yeah, and I just want to thank you again for organizing this. I think it's very fruitful. I think I want to say one thing, and I'm the first to blame. I think my general impression of this literature, I think there's a lot of interesting stuff, but I think we have a lot of conceptual discussions and maybe not enough really detailed empirical analysis, which really digs into the data and really looks what's going on the ground. But I think we kind of need this. I think there may be sometimes too many claims being made, but then actually when you dig into the data, you realize how it's so much more complex and so much more going on. And maybe we don't value this kind of really detailed empirical analysis enough. So in that sense, I think there's a lot, just to kind of echo what Nobertus and Gabriel said, I think there's a lot of space to do great work, particularly I think not particularly, but I think also for PGR students to really get stuck into the data and really kind of dig, because I don't think we do that enough. And I think related to that, and of course, I think, and also embracing in a way maybe different methods. So coming back to kind of particularly when we look at the firm, we just realized that just data really only tell you that much. So to be open to use different methods, you know, the newspapers, the journals, but also interviews or surveys, whatever, to really understand what is going on. So I think probably that's maybe the message I want to finish on, the need for detailed empirical work, which embraces methodological pluralism and puts the research question first, rather than maybe the specific methods. Yeah, these are my, I guess, my concluding thoughts.
Thank you so much. And Luis Fernando, please, Professor.
Yeah, I agree entirely with Nina that besides the conceptual discussion, we need much more empirical work on emergent economies and how to measure financialization, how to understand financialization, what are the connections that we should pay attention, and the role of the states, the financial system, non-financial corporations, and so we have a lot of work on this particular.
Yeah, maybe, and also maybe just to quickly follow up, because I know we have PhD students in the room, and just because I think very often the really interesting new stuff is in these PhD theses, you know, where people do this amazingly empirical work, but then maybe never publish it or don't get to it. It's in Portuguese, you know, these kind of case studies, or in Turkish or whatever. And I think so it's maybe just a call also for us supervisors, but also for students to think about, you know, is it worth translating the paper, or is it maybe worth producing kind of a 2-page policy brief or something where the main findings are summarized in English? I mean, sadly, it's just to make it a bit more accessible. Because I'm always certain whenever I do something on Brazil, I'm certain that somebody else, at least 10 people, have already said exactly the same thing in a much better way, have dug into the data, but I just couldn't find it because I don't know how to spell something in Portuguese, so my Google Scholar lets me down, or it's a PhD thesis. So I think just so it's a call on you guys also to, you know, because there's so much interesting detailed empirical work now specifically in Brazil, because we're talking about Brazil, which just needs to be made a bit more accessible to us who don't know where to find it.
Well, Nina, I know that you can read in Portuguese, for instance, but our science is essentially Anglo-Saxon science. That's maybe we are in the periphery. We have to do this effort to write more in English in order to have this change. We can compare and to change as well. And I think there are a lot of things to study. For instance, I would just give an example that there is a paper of Karlowski that is about the different sort of financialization in emergent economies. In her paper, China was considered one of the most financialized economies between the emergent economies. So recently it was published a paper with 2 Chinese economists in the Cambridge Journal that they are saying just the opposite, that China is, because China, as we know, has a very, very, very strong industrial structure. They have control on capital flows, and so I think that's sure we need a lot of studies. And I think that particularly the comparison between emergent economy will be very important to understand the specificities of financialization in the periphery.
Guys, so I'd like to take this final minutes just to invite you for our next session or next round. It will be, let me share this here. Well, you find it on the web page that we always share with you. So next session will be at the 7th of July. Will be with Rodrigo Viviani, who is here today as well, joining us. Thanks for joining us, Rodrigo, and Bianca from LUBS. And the topic will be, how does the international use of a currency affect an economy? So we have this first arch of 3 sessions. They are more or less complementary in some way. So we have the discussion about China and the international use of the dollar. Had today the discussion of financialization at the periphery in advanced economies, and now we can close this first arch with the discussion of the international use of a currency and how does it affect an economy. So we hope we can see all of you again in the next month. And I'll head to Bianca so she can share the final thoughts, and then Gabriel can close.
Bobby, the time we will reduce, the difference time we will reduce in July for 4 hours, right?
Actually, it's 4 hours now, I think.
Already 4 hours.
Now it's five hours.
No, it's 4, 5. You must be thinking about Germany. It's 5 hours with Germany.
Oh,
yeah, UK. Yeah.
Okay.
UK
You
is in a different time zone.
Sorry.
But one thing that it will be start at 11, so not 9 as today. You'll be allowed to sleep a little bit more here in Brazil. In the UK, just
and people in the UK won't be starving, and people in Brazil won't be sleeping. Hopefully, hopefully, yeah. So just to thank you, Luiz, Fernando, and Annina once again, and also the participants for the very interesting questions, for the discussions. That was a very rich presentation and discussion once again. So I'm just gonna pass it over to Gabriel. Or Gabriel is not here, I'm not sure.
I think he had some problems. So well.
Okay.
I'll make it so. I'd like to thank you everyone again, and well, hope to see you next month as well.
Thank you,
and
everybody.
I'll stop recording. Bye bye.